Do you need 20% down to buy a home? Of course you don't. This is Jennifer Sims, your favorite purple mortgage lady. I'm going to talk to you today about why you do not need 20% down to buy a home. It seems like you've been trying for years to save enough money for a down payment for a home. You've cut corners, taken lunches to work, and yet home prices continue to rise, and your dream of owning a home just seems out of reach. Guess what? Maybe you're closer to owning a home than you think, because for many loan programs, you do not need to have 20% for a down payment to purchase. No matter how much you may have saved, there's probably a mortgage program that can help you right now get into a home. Let's take a look at a few options out there. We'll begin with the FHA home loan. FHA is 3.5% down. They allow for that financing because they're insured by the Federal Housing Administration, or FHA. These loan programs are perfect for first-time home buyers. They do require mortgage insurance premium, or what is called MIP. Another great low down payment loan is the Home Ready Mortgage. The Home Ready Mortgage is 3% down. The Home Ready Mortgage is a low down payment, which is available through Fannie Mae. The Home Ready program allows for 3% down grants accessible to the market mortgage rates and offer discounted rates for private mortgage insurance. Home Ready also gives you the ability to use income from everyone who will be living in the home towards the actual mortgage approval. This can include parents earning pension or Social Security, or a roommate who just wants to go in and buy a home together. The Home Ready program is available in low-income areas with a high minority population in areas affected by a natural disaster. However, you do not need to be a low-income household or a minority to get approved. You must only buy a home in a pre-approved area. The next low down payment program is the Conventional 97, which is a 3% down payment loan program. The Conventional 97 is a special program which was recently reinstated by the Federal Housing Finance Agencies, or the FHFA. They are the parent of both Fannie Mae and Freddie Mac. The Conventional 97 requires a down payment of just 3%. The program also allows a buyer's down payment to be gifted by a third party, so you really don't have to have your own money for the down payment. The only requirement is that the person who is giving the money for the down payment is a blood or marriage relative, a legal guardian, a domestic partner, or a fiance. The Conventional 97 mortgage is limited to $510,400 regardless of your local mortgage loan limits, and multi-homes are not allowed. This program is also restricted to fixed-rate mortgages only. The 97 program may cost more on a monthly basis than other loan programs like FHA, but you can cancel the program's mortgage insurance in as few as 12 months from the date of purchase. So in the long term, your monthly payment may be less than the mortgage insurance when it's canceled. Next, let's look at the Good Neighbor Next Door program. Good Neighbor Next Door, or $100 down payment. The Good Neighbor Next Door program is a special U.S. Department of Housing and Urban Development, or HUD program. This mortgage program allows home buyers to purchase homes with just $100 down in approved Good Neighbor Next Door areas. The program is available to members of law enforcement, firefighters, or emergency medical technicians, and teachers of pre-K through 12th grade. Buyers in the Good Neighbor Next Door program may qualify to receive a home purchase discount of 50%. Seriously, you could get the house for half price. You must agree to live in the home as your primary residence for 36 months. This means that if you buy a $200,000 home with a Good Neighbor Next Door program and live in the house for 3 years, you will be forgiven $100,000 on the loan, which is a 50% discount. This is amazing. So if you are a firefighter, first responder, or a teacher, please give us a call. Another 100% is the VA home loan. This has no down payment required. If you've served your country, first, thank you for your service. And second, you have a great benefit with the VA home loan. They may not have told you a lot about the VA home loan in boot camp, but it is a pretty cool benefit that you should definitely consider. VA home loans are available to active duty members of the United States military, honorably discharged service members, and many surviving spouses. VA home loans are among some of the best no down payment programs available today because they require zero down payment whatsoever, and never require the buyer to make PMI. The VA home loan can be used for most any type of home, including single family, condo, multifamily, and VA loans. They are assumable just as FHA. Now let's look at a great no down payment. The USDA, my favorite loan. It is a 0 down payment. This loan is guaranteed by the United States Department of Agriculture and allows for 100% financing. USD loans, often called the rural development loans, and are available in non-rural areas. One of the biggest benefits of the USDA loan is that its mortgage rates are often the lowest of all of the low and down payment programs. And its mortgage insurance requirement is also at a very low. In order to qualify for USDA, you have income limits that you are required for, and you also have credit score requirements. Next, let's look at conventional mortgage options with private mortgage insurance. Conventional home loans with PMI. If you are looking to get into a house with less than 20% down, a conventional home loan with private mortgage insurance may be an option for you. PMI insurance is a type of mortgage insurance that protects your lender if you stop making your payments on your loan. PMI only applies to conventional loans, but other loan programs like FHA require mortgage insurance as well, although mortgage insurance on FHA loans operate differently than PMI. How much money you put down plays a role in determining how much PMI you'll have to pay. A small down payment means a bigger risk for the lender, so your PMI will cost more. The type of loan you get, like a fixed rate mortgage or adjustable rate mortgage, will also affect how much your PMI will cost, as will your credit score. One of the biggest advantages of PMI is that you may be able to get rid of the PMI at some point in the future. This means that after what you owe on your mortgage, below 80% of the value of your home, you can write to your lender and ask them to remove your PMI. If you qualify, it would mean that your monthly payment would decrease. PMI gives you the option to get into a home with less than 20% down, which could help you realize your dream of home ownership sooner. Finally, let's look at what's called a piggyback mortgage. Piggyback mortgage, which is 10% down payment, and then the piggyback mortgage is not really a mortgage at all. In fact, it's really two separate mortgages. It's called a piggyback mortgage because one mortgage is piggybacking on top of the other mortgage. So it will bring you to 90% of the total purchase price. It's also sometimes called an 80-10-10. The piggyback mortgage allows the buyer to put 10% down for a down payment. This allows you to avoid having to pay mortgage insurance, which is great. Instead of one mortgage, you have two mortgages. The first mortgage is typically a conventional loan and is approved at 80% loan to value of the home's purchase price. The second mortgage is typically a home equity line of credit, or a HELOC, that is 10% of the loan to value. Piggyback mortgages are often used by home buyers who plan to pay down or reduce the balance on their second mortgage within the first 24 months of home ownership. Whichever loan program works for you, it's important to remember that you have options and you may not need to wait to get into your dream home. Thanks for watching. This is Jennifer Sims at HOMESTAR, your favorite purple mortgage lender.